What is going on, everybody? Hopefully, guys are doing well out there. On today's show, I am going to answer a question I get asked quite a bit, and I'm going to have 5 stock recommendations with price targets that you should maybe get a pen and a paper out and jot down for future reference. Now, the question I constantly get asked here on the channel is, hey, Colin, you talk a lot about AI and technology, and I certainly appreciate it, but what are some other sectors and stocks that you like? Now, before I answer that question, I'm going to reference back to a video that we posted last week. In the stock market and really life in general, there are specialists, right? If you need guitar lessons, you're probably not going to go to somebody that's an expert in playing the trumpet. If you need your hair cut, you're going to go to a specialist. Heaven forbid you have a medical situation, you're going to find a specialist, okay? You need your clothes cleaned, you're going to find a dry cleaner. Same thing in the stock market. If you want tech stock advice, you should find an expert in tech. If you want bond or energy or Bitcoin, you should find an expert in each one of those different sectors. A huge red flag out there for me in the financial services world is somebody who claims to be an expert in everything. They claim to be an expert in healthcare, in consumer discretionary, and consumer staples. And oh yeah, the bond market and the crypto market. Oh yeah, and equities, not only here in the United States, but worldwide. That's a huge red flag, and I would run as fast as you possibly can from that person's advice. But the people that find a specialized lane like I have in technology, artificial intelligence, large mega cap software stocks, those people tend to devote a large amount of their time and large amount of their life to that sector and that stock, and they tend to have opinions that I listen to more often than not. But on today's show, given that background, there are other sectors and other stocks that I do invest in. Now, the first one is if you want some diversification outside of the technology field, is healthcare. Obviously, healthcare is one of the largest segments of our economy, one of our largest segments, certainly as we have an aging population. Certainly a sector that is going to get more and more attention and more money will flow into it. Also, my idea is that eventually kind of the mega cap technology stocks realizes that that's the sector that they can expand into. You saw mergers and acquisitions as it relates to Amazon into the healthcare field last year. And I think that's something that goes forward as these companies, at least from a regulatory perspective, are not allowed to make acquisitions inside of their core competency. So the way I get exposure to the healthcare industry is pretty simple. There are ETFs as it relates to healthcare, and one of them is the XLV. Now, the ETF has more or less gone sideways for the past couple of years. I think you're heading for essentially a breakout from a technical perspective. I'd wait for pullbacks under $130 in XLV. This tends to be kind of more your larger, more well-known, your Pfizer's, your Merck's, your Eli Lilly's that are held inside of that fund. Now, if you want to go a little more speculative on the healthcare side, you've got your biotechs. Now, many of you know I don't touch the biotech sector with a 10-foot pole because technically and more often than not in the biotech sector, your upside is for Eli Lilly, Johnson & Johnson, Merck, or Pfizer to buy the company. And so that's your upside. So you spend years trying to find that undercovered biotech stock, and then it does get bought out for a nice premium, but that's your upside. You don't get those multi-1,000% gains that you sometimes see in the tech sector because one of the big guys comes in and buys it. But if you do want to play in that sector, I think an ETF is appropriate for that as well. I tend to focus on the IBB. From a technical perspective, you probably can be purchasing shares of the IBB as we speak. Now, there's also the financial sector, something that I've covered very often here on the channel, not only from the big guys, kind of your mega banks, your Wells Fargos, your JP Morgans, and your Bank of Americas, but also your fintech sectors, the PayPals, the SoFis, the Squares, a lot of the kind of the smaller fintechs, Lending Club even, those have gone public over the past couple of years. On the financial side, I tend to stick with the big guy, and the big guy is JP Morgan. Now, JP Morgan did something savvy that a lot of the other mega banks didn't do over the past couple of years. They didn't load up on kind of a low interest rate treasuries and mortgage-backed securities. You look at Bank of America, they're sitting on huge, we're talking massive unrealized losses on their balance sheet. It means that they bought things like mortgage-backed securities and treasuries at a low interest rate, one of these kind of like 2-3% coupon on those things. And then what happens is when interest rates go up, price of the bonds goes down. So it's an inverse relationship. So as interest rates has gone up, those 2-3% mortgage coupons, those bonds and that paper, that has disintegrated. And so Bank of America and a lot of large banks has to recognize that on their balance sheet as a quote unrealized loss. JP Morgan didn't do that. They didn't load up on that like really low paper. And so it's put them in a great position. And I think you have the best leader, Jamie Dimon at JP Morgan. And I think you can buy shares of JPM for $150 or less. So wait for a pullback on that. Now, on the consumer side, I think there is a clear winner. Obviously, as most of you know, I love Amazon. Walmart, you can throw in there too. I think you're looking at two companies that are a staple of American retail, but there's actually a third staple of American retail, and that is Costco. Shares of the wholesaler have absolutely skyrocketed. And if you look at a chart of Costco, it's pretty much straight up in the air. So you're going to have to wait for pullbacks. I'd say wait for under $650 on Costco, but the way they lay the stores out, the way they treat their employees, the way they run their company, the $1.50 hot dog, the $5 rotisserie chicken, a lot of things going well and going right for Costco, and I don't see their business model being disrupted more or less anytime soon. Now, the last two stocks also come in a pair. They also focus on the consumer side, but they specialize in real estate and construction materials. You probably can know the companies off the top of your head. It's almost a duopoly, if you will. Yes, there's like Ace Hardware. There's some other maybe smaller regional hardware stores, but the two big guys are Lowe's and Home Depot. And as somebody that I've sold on Amazon, I continue to sell just casually on Amazon. I sold on eBay as early as like 1999, I think was my first time that I bought and sold something on eBay. So I've been buying and selling stuff online for a long period of time. And for the most part, anything that you can sell in a retail store, you can also sell on Amazon. You can also sell at retail. Home Depot and Lowe's are slightly different. Yes, a lot of their SKUs, a lot of their stuff that they sell in the store can be sold on Amazon, and it is sold on Amazon, but there's a lot that isn't. You can't buy really necessarily a 2x4 on Amazon, live plants. Sometimes you want specific screws and bolts and those types of things. Typically are better had and better found at a specialty store. And I think Lowe's and Home Depot, their business models are going to be durable going forward. Lowe's you can probably buy right now from a technical perspective. Home Depot's run just a little bit more. I'd wait for pullbacks in Home Depot south of $320. Folks, don't take this video as me bailing on the AI and the tech sector. In fact, I think our track record over the past couple of months as it relates to recommending technology stocks is absolutely stellar. We also are heading into a week where you have all the major technology stocks from Microsoft to Google to Apple to Amazon, Meta, AMD. They're all reporting earnings this week. And I think for the most part, it'll reinforce that that is the sector where you're going to be able to not only grow your wealth, but probably easily grow your wealth over the next couple of years. Hopefully you guys have a wonderful day out there. I'll see you again later this week. Good luck with your investments.